Sylvia. I am Senior Loan Officer for RE/MAX Champions at the Champions Mortgage. And I have about 30 years of experience in this industry, so I'm hoping I can bring a little bit of knowledge for you guys, tools that we can help our real estate agents work through this market right now. Today's class, we want to empower agents to work with buyers. I thought I'd invite Leo, my co-host, one of my preferred realtors, since he has 16 years of experience.
20.
Oh, sorry. I didn't see the big 20 years of experience in this industry, and I'm thinking the way we want to do this is share ideas in different scenarios that we work with through the market.
Good and bad, not
good and bad, yes. So first I'm going to start with a story.
Or challenging, not bad.
Yeah, challenging. So most of you know I was in the military for about 8 years. When I was in the military, I don't know if any of you played sports. Raise your hand if you played any sports. Okay, I played none, 0. I could not run a block without running out of breath. Sports was not my thing. I was a bookworm. For me, it was studies. But then I decided to join the military. When I joined the Army, my recruiter said, all you need to do is be able to do half a push-up, and then you're fine. And I said, oh, well, I don't know how to do that. Like, oh, just get on your knees and have a push-up and you're good to go. So I thought, well, I can do that. So I tried that and it was good. I make it to boot camp in Fort Jackson, South Carolina. And of course, we get our first little physical test. And they said, okay, everybody needs to do at least one push-up to go to the next level, because we were in the initial location. And I couldn't do one push-up. I could not do one push-up to save my life. And I was like, okay, so then now what? Again, I'm just literature, books, math. That was my forte. Sports, nothing at all. So what happens? They held me back 2 weeks. They said, you're gonna have to stay here. The entire troop that you came with is gonna move forward to training, but you're gonna stay here 2 weeks until you're able to do one push-up. And from somebody that got straight A's in school, that is devastating, because I was used to education came natural to me, and anything that I studied was very easy, but sports was not. So I stayed back, and they held me back 2 weeks. By the time I made it to boot camp, I had that ego hurt, because I'm like, what do you mean I'm held back? It's almost like I held back a year. So I make it there, and I told myself, I cannot be the last one here. I have to be able to pair myself up with those that know how to pass these physical exams. I have to do that. Long story short, I started thinking, what do I do? So I would see, well, they train you so that you can do more than one push-up by the time you graduate, because any little thing you do wrong, they'll say, drop, give me 10. Drop, give me 10 for anything. Your hair is out of place, drop, give me 10. I mean, just like that. They call you and you're walking a little bit slow, drop, give me 10. If you put a foot on the grass, drop. But the whole purpose of that is so that you can start building muscle, and you are sore as hell. It's terrible. It was time for running, and I couldn't run to save my life. So I started pacing myself with the girl that could go faster than me, and I would try to keep up with her. And then I started pacing myself for the next one. Then by the third part of our training, I was pacing myself with the fastest runner there. Long story short, by the time I graduated, I was the second fastest runner out of 85 girls. I was able to do 100 sit-ups in 2 minutes, and I was able to do 25 push-ups in 2 minutes. So I guess the whole point of the story is, when you are looking into build some sort of strength of any kind, and you have to pair yourself with somebody that has some knowledge ahead of yours, so that you can reach out and start learning more. Because if you don't do that and you try to do it all alone, it's going to be a little bit harder, and the road is going to be a little bit longer. So anyway, the reason why we're here is because I'm hoping that we can bring a little bit of information for you guys and try
a little light in today's market.
In today's market, yes. So this is my co-host Leo.
I'm Leo Alcazar. How are you? I've been doing real estate. This is really my 20th year. I started in 2005, and then I got my Arizona license also 4 years ago. So I've been doing that, and just going back and forth. I have property out there, so I go back and forth. I like it out there, and that's pretty much what I've been doing. And I'm just here to, I guess, talk about where the market is and what it's doing. What are they saying it's going to do? and just the struggles that we're all having. I'm assuming, unless you're like killing it, but you know, it's just part of the real estate market, and this career is always has its ups and downs, and you know, just basically just to talk about what's going on, and we can brainstorm off each other and go from there. You know what I mean? That's pretty much it.
Leo. Thank you. So today we're going to talk about 5 different tools that I think are essential for us to be able to help our buyers and empower them and make it a little bit more comfortable. It's going to be getting them fully pre-approved, and we're going to go in detail into these topics. Budget planning for them, down payment assistance and what's out there, educating our clients in today's market and being realistic of what's out there and what you need to be able to get there, and teamwork. You have to team yourself with the right person, with the right lender, with the right agent, and if you feel like there's a certain area that you need help with, nothing wrong. We have a great team of realtors and RE/MAX champions you can pair up with, so we can make sure we do that.
Not even that, it's just so much knowledge out there, you know what I mean?
There
like,
is.
'cause what I'm doing is not what you're doing. What you're doing is not what she's doing. Like, you know, Honey, the guy always walks around. Him and I, man, he's on the phone, and I'm just like, I hear what he's talking about. Comes in my office, he vents, we talk, and we go forward. You know what I mean? Like, he tells me what he's doing, his struggles, his good, you know, his good woes, his bad ones, and we just go forward. And you know, so when you're sitting there and you're like, oh man, this my condo's been on the market forever. That's true. You know, yeah. And you know, you're doing everything you can to get this thing going, and you know, and you hear other people tell you the same thing. You know, the market's a little bit slower. They're staying on the market a little longer. You gotta price it right, stuff like that. You gotta do your open houses, even though only one person shows up in 5 hours. But whatever it is, you just gotta keep plugging away and keep going forward.
So I think the way I would like to do this, I'm gonna ask Leo some questions that as a lender, I would wanna know. A lot of it is because sometimes when I meet buyers, they will ask questions, and I think buyers need for both the agent and the lender to really take our time and educate our clients and really understand that they don't know the same lingo that we do. For us, but Leo and I could talk for hours, but we're talking the same language: real estate, loans, rates, all this stuff. But then there's new agents, there's new buyers, first-time buyers that don't know. This is the first time they say, I want to buy a house, and where do I start? Who do I talk to? So we need to make sure that we take our time and make sure we educate them. So I would like to know, Leo, from you, how are you getting your leads these days?
100%. Well, not 100%, but a high percentage of it is everything in my phone book, everything in my contacts, friends, family, old clients, constantly. You know, you gotta remember their birthdays. You know, you have to remember, you know, anniversaries. You gotta see them on Facebook. You gotta kind of be out there on social media. Happy birthday, you know, Merry Christmas, or whatever it is, you know, or hey, what's going on with that, or whatever happened to this, you know, just constantly be in front of them, because they do forget, believe it or not. I was all hurt a couple of times because I had a buddy who sold his house, but I didn't talk to him for 2 years. You know what I mean? And he sold his house like, this is a couple of years ago. And he's like, well, you didn't call me, I haven't talked to you, blah, blah. I'm like, I know, but it's not his fault. You know, it's my fault. You know, and we're friends and stuff like that, but always stay in front of people. That's what thing you always want to do. Always have like a business card or something to give away. I give away pens and like little things like this, but I'll show you guys that later. But it's just always being in front of people and reminding them that you sell real estate and you're good at what you do and you like what you do, you know, because a lot of people have licenses, and, you know, next thing you know, they're talking to somebody else, and then there it goes, you know.
So do you guys ever get a question asked such as, when is the best time to buy? Do any of you have ever gotten that question before? That they'll say, should I wait? Should we do this? And I mean, what do you say?
Now, when you're ready.
Yeah, right now.
If you can afford it,
10 years ago or now.
yeah, if you can afford it,
100%.
it's a good time to buy. If you can afford it, it's a good time to buy. That's what I say. You know, because you
100%,
can't predict
yes.
the future. You can't predict what's going to happen. You know, I've been in business obviously 20 years. I've said that a couple of times. It's been to the point where interest rates go down, prices go up, and it goes both ways. Interest rates go up, prices go down. Right now, we're living in a world where it's kind of like the shift isn't really there yet. You know, I can see prices kind of dropping a little bit, but not like it was before. So, I hear all these experts and all this stuff, and, I have a lot of investors I deal with, and we talk about it, we go to lunch, and we have beers and all that stuff. Anyway, and there's a lot of uncertainty in what's gonna happen, and one of the things that I would never predict or think is that the rate's gonna drop, and then there's gonna be a surplus of inventory. And then that's gonna make the prices drop. That's what they're saying. I don't know how that is gonna work. I don't know if that's true, but there's so many different opinions out there. No one knows. No one knows.
Coming in.
Yeah, but anyway, that's.
Can we get some more? Yeah, thank you.
Yeah, so
You can take
Have any of you ever lost a deal due to your lender? Your lender couldn't close the deal. Let me tell you something that happened. Hi, sweetie, thank you for coming. I had a call from one of my prior clients, and this is very interesting because this is something that happens a lot, and I didn't know that it happened. So, how many of you are familiar with supplemental taxes?
Okay.
Yeah.
I've been doing this forever. I still don't understand it. Okay, and I always rolling around with my, hey, what does this mean? What?
I'm a visual learner, so I'm gonna try to explain it so that when you see it and your clients call you, you'll be able to understand. So here's the most simple way to know it. When you buy a house, the title is gonna give you the tax certification based on the seller's purchase price. For example, we have Desiree. She bought a house 20 years ago for $250,000.
Yeah.
Okay? The taxes at that time were $3,125.
This is important, you guys.
Okay, so that's what taxes. So now here comes Oralia and says, I want to buy this house. As a lender, I need to know what her new tax rate is going to be. So if she buys this house from Desiree for $600,000, her new taxes are going to be $7,500. Okay, so these are the taxes from the seller. These are the new taxes, okay? So as a loan officer, my job is to calculate the PITI, principal, interest, tax, and insurance, with the new taxes, which is $7,500 a year, okay? That's my job. Now, I worked in corporate before where I was an underwriter too. So we have underwriters, we have processors, we have openers, we have all that. And mistakes happen. That's human nature, mistake happens. So what happened with my friend who sent me her sister to say, she doesn't know why her payment is going up or whatever. What happened is that the loan officer didn't catch that her PITI was calculated based on this right here. So she quoted her a payment and says, your payment right now is gonna be $4,200 a month. And Lala says, yeah, that's in my budget. I'm gonna pay $4,200 a month. Well, what happens? The county, for whatever, and I wish I had a title person here, the county takes up to a year to reassess the price. Why? I don't know, and if somebody knows, I would like to know. Because that gets recorded, and until it gets recorded, then you get the keys, right? You don't get the keys sooner. The deal records, you're the new, Lala's the new owner, here are the keys, right? So at that point, title knows, the county knows, she bought the house for $600,000. But then she has in her mind, my payment is $4,200 and I can do that. As the mortgage company is going to pay whatever's billed to them. So if the county hasn't updated their taxes and they're billing $3,125, the mortgage is gonna pay $3,125. They're not gonna say, no. The new taxes are $7,500, so I'm gonna pay you $7,500 even though you're billing me $3,100. Does that make sense? Mm-hmm. So they're not gonna pay more. So then at the end of the year, the law in escrow impounds, you cannot keep more than $50 than what you're supposed to have in your account. So if at the end of the year, there's more than $50, which there is because they collected for $7,500, right? But they only paid $3,125, there's a surplus. So the money goes back to the buyer. The buyer feels like it's Christmas and they spend the money.
Yeah.
A few months later, when the county says, oh, wait a minute, wait, you bought a house 10 months ago and you only paid me $3,125 and you were supposed to pay me $7,500. Let me send you another bill for that amount. So then you're gonna get, the mortgage company is gonna say, Lala, your escrow account is short. So now you need to pay this money and now your payment is gonna go up to $47.81. And that's what happened to my friend's sister.
So the worst thing is getting that call from your client that is struggling to buy the house, and then a year later they're like, "Hey, I got this tax bill." You're like, "Oh, it's just something on tax bill." You're just like sweating on the phone and going, "Okay, let me see."
Surprise!
You start calling everybody. You're just like, "Well, yeah, it's something on tax bill. Like, you gotta pay it."
So
instead of explaining it to them before they get that bill. You know what I mean? Yeah.
So and the reason why I think it's important that even though that has something to do with a lender, we go back to what I was telling, when you start pairing yourself up with somebody that knows a little bit more, and you want to be the one that knows more, coming in left, you want to be able to guide them and kind of be that person in their ear. And I tell that to my buyers. Hey, you're gonna get, when we sign loan docs, you're gonna get hit with supplemental tax within the first year. I don't expect you to memorize this. If you get a bill or you get a check from your mortgage, please call me. Before you spend it, before you do anything, please call me. Sometimes it happens backwards, where they get the supplemental tax, they haven't gotten the money back yet. So then I'm gonna say, check your account, your escrow account, and see if you have money left in your escrow account. When the mortgage statement comes, it's gonna say escrow balance. And then if you see that there's enough money, you're gonna say, call your mortgage and say, I got my supplemental taxes, can I send them to you? And if the mortgage company has them, they'll pay. But if they already sent the money back to you, then you're out of luck. Does that sort of make sense? So that's sort of why it's important that you know how to handle the supplemental taxes, because a buyer, at the end of the day, relies on us that are licensed to guide them and educate them. And even though somebody else made a mistake somehow, somewhere, it doesn't matter. They trust us to know. Go ahead.
And so I just wanted to say, you mentioned about loan docs. So there is a notice in there is a disclosure that they're gonna get it, but they forget, right? So we always want to remind them, like Sylvia said, they will get it, they'll forget, and you're gonna get that call 6 months later or 7 months.
Yes, and it depends on when you close. It depends how much money you have in there.
Yeah.
So this particular person, I looked through the loan docs and they didn't collect enough for her new taxes. They collected for this. How did they go past QC and underwriting?
I know.
Lala and I work together as underwriters. So we know, we see, okay, how did it get past that? I don't know, funding, closing, selling the loan. I don't know. So now I say, well, she says, well, is this only one time? I said, well, that all the shenanigans of the supplement tax only happens the first year. But your new payment is gonna be $47.81, not $42. But I was told they miscalculated. And now, if you say, well, I bought the house.
Think about that, $500 per month.
And if anybody has ever bought their first home and you remember how scary that was, you cannot afford an extra bill of anything, let alone $500. So it happens. So be very vigilant. I think in today's market, we have to take our time really educating our buyers. When I get clients referred to me by my realtors, the first thing I do whatever I can to meet them in person, because I feel like the conversation is very different. If it's husband and wife, husband has questions, wife has questions. I have 2 transactions in escrow right now with 4 buyers. Mom and dad, daughter, and husband. And normally my appointments take about an hour. This was about 3 hours. Because then they brought another son that's gonna buy next year, so he had questions. And it was, and then I remind them, I don't expect you to memorize everything, but if something comes up and you feel like, I know I asked or I can't remember, call me again. Because we need to remember, and it's easy for us to just go, right? And just say, okay, I got a buyer, I got a listing, whatever. But I think in today's market, our buyers are a little scary, right? They're a little scared. Should I, shouldn't I hear all these headlines and, oh, the market's gonna crash or whatever? Okay. What's your opinion on that, Jennifer? Because I have my opinion on, do you think the market is gonna crash?
Oh, I thought, what is my opinion on what? The market
The market crashing.
You answered.
Yes. No, what do you think? And we're all gonna have our opinion, basically, because we've been around for a while.
So it's funny, I was talking to my banker, Scott at American Business Bank, and I have some of my best, conversations with him because he gives me an idea of, where the banks are at and what's happening on that end versus our end as realtors. I've been doing this for, I think, 25 years now. And the one thing that I could say is no, I do not feel it's gonna be another 2008. I think that what happened in 2008, that's like every maybe 100 years,
I agree.
And we've already been kind of going through what I call the silent killer, that we're actually moving through it, but we're not even completely immersed in let's say the depths of it. We're still selling real estate, we're still moving along, we're still getting listings, buyers are still buying. So no, I don't think it's doom and gloom. I see
agree.
It's moving more.
Yeah.
I see more transactions coming in. I see closings coming in. I see a lot of movement. So that's how I feel. And there's always a market anyway. There's always a market.
I agree. And I agree with you, Jennifer, from a lender perspective. And the reason why I'm going to ask questions to all of you is because I want you to hear what my opinion is as a lender, because I see from a different lens than from a realtor. Because you're out there on the streets trying to get clients. I'm sitting here with the AC and just getting the call saying, can you meet a client? Let me finish my soda. I know, I guess. Let me finish my margarita. Give me a second. Anyway.
But as far as
what do you think? Do you think the market's going to
this is what I'm saying right now. Okay, back 2008. I don't know what percentage of the listings do you think were short sales? 85, 90, a lot.
I think all of them.
Okay, like almost all any sale on the MLS was a short sale, right? And so I started working notice of defaults. That's what you guys have in here, okay? They're 3 months late on your house payment. You're in trouble for whatever reason, and I would just door knock those, okay? 4 years ago, I got on Retran, and that's the same thing you guys have. It's a program, and there was 5 or 6 per county. Okay, like literally, like there was no short sales, no notice of defaults. There was a couple here and there, nothing in Chino Hills, maybe one once in a while. So there was really nothing to really market for, on that. Now, I pulled these up today, from April 1st to today. Chino Hills, Chino, Fontana, Ontario, Colton. I think I just did those 5. There's 102 or something like that. And just in 40 days or whatever it is. So I don't know how they haven't started foreclosing and more short sales have been going up on the market. I've seen a couple here and there, but this might be the next wave. Who knows? I don't know. And a lot of these people are getting out of it. They're getting out of, okay, so I was being lazy. I printed all my stuff out. I was gonna go door knock these doors, and I didn't.
You should do it.
This actually worked for today. So there's my my paperwork. And I go, you know what? It's been months, like probably, I don't know, a long time. So I'm gonna go back and look at the properties now. Out of these 10, 4 got listed. Okay. If I would have knocked on the door, I could have gotten 1 maybe, you know what I mean? Like, or 2 or none or whatever. But out of 10, 1, and then I put in there what I think their property's worth and what they sold for, and it's pretty spot on. You know what I mean? So this is something you guys can use to get new business. I'm telling you, this is, you know, there's a lot of business to go around for all of us. You know, you don't have to fight
Just
over
putting
it.
the
You
time
know,
on this, right?
like, you know, I'm dead serious. It's happening, and just that's pretty much it on this part.
Yeah, it's just to answer your question about why we don't have a lot of REOs out in listings, because the banks are selling them in the back door. Because
Oh.
they learned their lesson in 2008. So it's all about economy, right? Like a forecasted economy. So I've talked to some of the REO asset managers, and so they learned their lesson in 2008. So now it's all going through the back door. They don't want that type of market anymore. They're trying to make it look like it's all healthy, it's all.
Yeah, well, I get that too, but I'm actually looking at the history of what they have going on, each one of these. And they were able to figure out how to get out of it and release list tenants. And I don't know how they're getting the loan, I don't know what they're doing, but it's not selling, you know what I mean, on some of these. So, except for the people that do want to sell and they list with an agent, you know? So it's just, I don't know, I think it's nuts. I don't know what's going on, but.
Well, something is happening.
I think in essence also the banks are more willing to help.
Yeah.
Yes, that is true.
Instead
There's
of
constantly
having those
notices in there, are you
foreclosures
behind,
on
do you
the
need to work
market?
with,
Yeah.
which was ridiculous back in 2008, when as soon as you were late, they were starting.
Yeah.
Next, thing you know, they had way too many foreclosures, and they're
Yeah.
like, okay, so now what do we do now, right? That was crazy.
Yeah. So yeah, so that's what I've been noticing. And I also have a friend who's in kind of a little bit of trouble, and he's up in Fillmore, and I'm just like trying to help him, and then but I'm looking at his stuff. There's nothing recorded. He's been late like 6 months, stuff like that, and I'm just like, you know, I don't know. You know, so it's, you know, that's another thing too. They're being slow on dropping the hammer on people. Yeah,
Yeah, they don't want it.
they don't want it.
There
Yeah.
was also a grant that was going on for maybe about 2-3 years. It just stopped last year because they ran out of funds.
Mm.
So the government was giving people the amount that they were behind on. Like, let's say $40,000. They actually went through a whole process, they were approved,
Mm.
and they were given the money,
Really?
they didn't have to pay it back.
Was that in lieu of modification?
Home, similar.
Something similar?
But it was a grant.
Okay.
That they were giving.
I didn't know, that's good. See, that's,
100,000.
Yeah.
wow.
Yeah, and
That
I
is
had a
really
friend
good.
that was actually helping borrowers do that.
And I agree with you. I think the banks learned their lesson, and they realized the expense of foreclosure, it's ridiculous.
Because me, I would like for everything to foreclose. That way I can buy
That's
stuff
positive.
and hold on to it, or get my buyers in, or whatever. You know what I mean? I hate to be that way, but it's true. You know what I mean? Like, I don't know, but this is what it is. You know, so I can't change that, and you just got to keep looking forward and trying to find out the good deals and market that. I mean, I marketed. I'm telling you, I went with Kelly. We went, knocked on 10 doors, and I get a call. You know, we put on a reverse mortgage. You know what I mean? Like, you know, it's like there's a lot of things you can do with them and help them. So just do whatever you got to do. You know.
I have a question. I'm getting a lot of investors emailing, texting and all
Yeah.
that. They have off-market properties for sale. So I don't understand, what's the point of the off-market properties when if you put in the MLS, you can get a higher price for your
I
client?
don't know.
don't
I
get it.
always feel like that's kind of like a spam deal. You know what I mean? But
I have my opinion.
I do get like investor lists sometimes, but I get like bombarded by those.
Yeah.
You know, you just kind of look at them, and some of them look okay, but you know, I don't know. I don't think there are any killer. There probably is a killer deal out there. You just gotta find it, but
Well,
I
why
don't know.
wouldn't they put it on, that's what I don't under, these are agents.
Yeah.
And why would an agent, and there's a whole sector of
I don't know.
off-market people that sell, and I don't understand that because.
What do you think, Jennifer?
Probably like
Because I have my own, I mean, we all,
wholesaler.
I think that they target a lot of people that are in financial distress.
Mhm. That's right.
And, you know, they don't want to do either work to the property, they don't have the time to sell it and to get, you know, the proper price for it. And I think everybody involved sort of has something to win in those transactions. Because, you know, in reality, obviously you list it, people, you have to be careful when you're licensed. If you're a licensed agent and you're doing those types of transactions, it can be said that we should know better.
Like
As
predatory.
licensed agents, like it's our duty as a licensed agent to actually market it to the most potential clients that are out there to get the highest offer for the client. So it's if you're a licensed agent and you're doing that, as on the listing side, it's not,
It's not to the benefit of the buyer.
No,
the borrower.
it's
I agree.
not.
I have a feeling it has something to do with
That's
that.
another thing
Yeah.
too, like my buddy, the one I tell you guys about, he's like, well, I'm just gonna call, the people on TV. I'm like, they're professional, man. They're gonna get you, they're gonna hook you, you're gonna sign, and you're gonna be done. You can't call me. Don't call me. You know what I mean? Like, once you sign that paperwork, you cannot call me. I can't talk to you about what they did to you.
No.
And, and I had to scare them, that's true. You know what I mean? Like,
Sometimes with stuff like that, people that are not licensed, actually have like a potential to even make more money. I have a lien against a property from probably 20 years ago, and it grew from, I believe, 20,000 originally owed to probably like 50,000. And there's people out there non-licensed, because I thought I'm gonna get into a conversation with this guy to see how he does this. And so the first thing I asked him is, are you licensed? But what he's trying to do is buy notes from people at a very discounted rate, like at $10,000. And then he approaches the property owner that's in default and says, you know what, you're in default. I'm going to give you whatever amount of money, very, very low amount, sign the property over to me, and then obviously pays off, my note at a low discounted rate. But what did he just do? I mean, he acquired, a property.
took advantage of somebody.
Yeah, and people make a lot of money, doing things like that. Just, under the radar. And then that same person could list the property. And if they get, a good realtor to list it and obviously get them the equity on the home that they own. But a lot of that happens. And a lot of it happens.
Unfortunately, yes. So I would agree.
Yeah, but one thing I will say is a lot of that property out there, these notice defaults, almost all of them have a ton of equity. You know what I mean? And
Yeah.
if they're gonna lose it, you're better off helping them sell it, hooking them up, taking care of them, better than them losing it, you know what I mean? Or whatever the next plan is,
Yeah.
So now I have a question for obviously all of you, but we'll start with you, Leo. What would you say is the number one objection that you have with buyers? Like, they're like, I'm ready to buy, but what would be the one that you're seeing the most, or is it?
Let me tell you about my buyers.
I
They think
need to see.
it's a market where they can lowball everything, ask for $15,000 in closing costs, drop the price 20 grand, and then they're wondering why they didn't get the property. That's what
Anybody
I'm
seeing
doing.
anything else?
Today, that's what I'm working on. Like, who knows? The next client might be better. I don't know. In reality,
I
that's
think
how it
that is
goes.
the market though, because I have an offer for my client and it was 725 and my client say, I put an offer for 685.
Yeah.
And then she said, and I want closing costs.
Of course.
3.5%. I told her 3.5%. Okay, let's go for it. No, she got accepted, but she didn't go through. And I know what she didn't go through, but she got accepted, and I said, do you want it? And she couldn't do it. But no, this is the time. This is the time.
So you're seeing that is
Yes,
going on and
yes,
it's
oh,
happening. Okay.
definitely,
Yeah.
yes.
Well, then,
I mean, I
there
still
you
do
go.
it because they asked me to do it, but I'm like, this is probably not gonna work.
Yes. Do
That's
any
the
of you, or how many of you are familiar with grants and down payment assistance? Do anybody know the difference? You're familiar with them? Anybody does not know?
We can explain.
All right. So there's down payment assistance. You'll see a lot of DPA, down payment assistance. We get a lot of acronyms. Down payment assistance is a loan that gets added onto your property. They'll give you the money. Let's talk about CalHFA, which is the most common one. Normally you come in with 3.5% down, okay? But if you don't have the 3.5% down, CalHFA will say, I'll lend you the 3.5% as a down payment. You just have to pay for your closing costs. That 3.5% second stays in your property as a silent second. Now, what is a silent second? It's a lien on the property that you do not have to make payments on. There's 100% financing where people will do 96.5% first, 3.5% second. You have payments on first and second. And then there's down payment assistance, which is the second is silent. You make no payments.
That's the grant, right?
No,
Oh,
that's down payment assistance. And then we're gonna get to the
Okay.
grant. So that down payment assistance, that lien stays on your property as long as you don't refinance and you don't sell, it stays there and it accumulates 1% per year in interest, which is nothing. And there's no prepay penalty. And I tell them, if at some point you do your taxes and you want to pay it off, you're welcome to pay it off. But if you choose not to pay it off and in 5 or 10 years you choose to refinance, the lien is going to be there. It pays off, or sell, pays off. So we have a first and a second, which is 96.5 is your first, and then your second payment, or we have the down payment assistance, which is a 3.5%. Then we also have grants. A grant is money that you get gifted by the lender or a certain organization, and you don't have to pay it back. Some have stipulations where you have to keep the loan open for 5 years so that it can be forgiven, or sometimes it's just there and as soon as you close escrow, you can pay it off anytime. Or you don't have to pay it off, I'm sorry. You don't pay it off because there's no lien on it. Here's where I think the catch is, and not that it's illegal, it's perfectly legal. The rate is higher. So most likely, if you're going to refinance to get out of the high interest rate, well, you don't have enough equity to refinance. So you're likely to keep that payment going for a few years. Does that make sense?
On the
'Cause if you-
silent second, not the grant.
On both.
I thought the grant you don't have to pay back.
The grant you don't have to pay back, but you have a much higher interest rate.
On the grant.
What do you mean much higher?
On the first,
On the first, okay. thank
on the
you.
loan with the first.
So in the grant, they qualify for less?
Yes.
Like at the DPA?
Yes,
Okay.
they qualify for less because they give you a much higher interest rate, and they want to make sure that your back-end ratio is about 45% to 50%.
And how much grant do you guys work?
The one that we have right now is 3.5%.
3.5?
So they have 2% and 3.5%. Okay,
So as a realtor, I get these calls all the time. I get people sending me TikToks, buyers, and all this information on all these loans and this and that and blah, blah, and why can't I get, free money? And, I always tell my clients, there's no magic wand, you know what I mean? Like the government's like, you have to qualify, and if it's high risk, it's gonna be a higher interest rate, you know what I mean? So, and then I just send them off to her. But you have to they think it's, this magical thing that's gonna happen, and it's like, you can't make this much, you can't make this less. Your credit score needs to be here, you can't have any tax needs, you can't do this. It's just so much red tape for these loans, I think, that are pain in the neck, but they go through, And if you got the right lender to have the knowledge and to deal with that, then, that helps a lot, believe it or not.
so does that sort of answer? Go ahead.
What is the interest rate approximately?
So the one that I have in escrow right now, it's 7.75
For grant or DPA?
for the first, the payment on the first, the interest rate, the grant is free. So they're giving you 3.5%, and as soon as we close escrow, it doesn't even go on your LE, your lender estimate. They just grant you the 3.5%. But the interest rate on the first is 7.75 with a 1 point cost.
So 1 point cost, they have to pay that, the 1 point?
Plus closing costs. Mhm.
Plus closing.
You can't ask for closing costs on a contract for that?
You can.
Yeah,
Oh, see?
sellers can pay the closing
Yep.
costs, yeah.
Yep.
Okay.
Does that, see, so we have the three, it's a first and a second, we have down payment assistance, which for me, out of the three, I think the down payment assistance is probably the best, but they do have income limits for certain counties, just so you know.
And isn't it on some of the grants, the money can run out depending on what organization, and that's the fear that.
That's a very good question. Okay, so have any of you heard of the term non-QM? It's a non-qualifying mortgage. That's what it is. It's a mortgage. It's a non-qualifying. That means anything that is not your traditional pay stubs, W-2s, you qualify with them. So these are funded by investors. So anything outside of your conventional FHA, they're non-QM products. And that includes your grants, includes your ITIN, includes your P&L only, includes your VOE only, includes all those. Can those run out? Yes. I have a story. Remember when we had COVID and the year where everything shut down? And my daughter was like, Mom, they're gonna tell us we can't go to school. I'm like, they're not gonna send me home. Next thing you know, it's like, Mom, they sent me home. I'm like, what? So she's home, and I'm like, wait, no, they're gonna shut everything down. Next thing you know, here's Jennifer. Okay, well, as of this one, we're closing the building. I'm like, wait, what? Well, my office is in there. So I remember coming here by my lonely self, but you didn't hear that. I had a couple transactions in escrow. Signed loan docs. They were gonna fund 2 days later. And the investor said, as of today, we're not closing any loans. Signed loan docs. Because these investors freaked out and they say, I don't know what's going on, the world is gonna end, and I wanna keep my money, I wanna become a rich man in this planet.
Yeah.
So these transactions, these non-QM products can disappear at any time. Not likely doesn't happen often, but it does happen.
So I do have a question.
And that happened to me on Latino, just so you know.
So, you know, all these guidelines are always changing, right? So what's the difference between the FHA pros and cons and the conventional?
All right, that's a very good question, Leo, because then people wonder, like, when I talk to clients or buyers, sometimes they come with an idea, this is what I want. And so then I said, well, let me ask you a few questions and then we'll decide which one. And then I present them with both options. FHA is a government program. FHA has a set mortgage insurance that is not driven by FICO score. So if you have a 600 FICO score or you have an 800 FICO score, your mortgage insurance is the same.
Anyone need to know what mortgage insurance is?
Mortgage insurance.
Everyone knows?
Yeah,
Okay.
it's the same. It's the same percentage that they charge you. Same percentage. FHA, because it's a government program, they want to promote buying homes, right? So they're more lenient. That means they have lesser down payment, 3.5%. The mortgage insurance is less. You can go as low as 580 FICO score. Actually below that, but then it's 10%. But 3.5% about 580 FICO score. So they're very lenient.
And the rate's a little better, no?
And the rate is usually better. If you have a FICO score above 700, which is that's the sweet spot, then your mortgage insurance is much better if you go conventional. You come in with 5%. So that's when, so if I ask you, well, what we're talking, I said, what do you think your FICO scores are? And most clients that have good credit, they know. Oh, I'm about 780. I'm about 810. The ones that say, no, I mean, I normally don't check. Then you know, I'm like, oh, let me try credit. You know what I mean?
That's true.
That just happens. The ones that, because you're monitoring your FICO scores every day, you're like, oh, whoa, where did I move a point? So if you are at 700 and they want to do 3.5% down payment, I'll say, let me compare if you come in with 5% versus 3.5%, and the mortgage insurance can be $200, $300, $400 difference just on the mortgage insurance alone. Because then at that point, your mortgage insurance is a lot cheaper as a conventional.
What is the PMI for FHA? The percentage?
0.55
0.55?
Mhm.
Yes.
Mhm.
For FHA, right?
for FHA. Yeah. Okay. Now here's another plus to a conventional loan. Probably a lot of people don't know. When you have an FHA loan, if you want to get rid of your mortgage insurance, you have to refinance, right? You want to get yourself out of there and go into a conventional when you have 20% equity. Okay? But let's say you're in a conventional. You get a conventional loan, you come in with 5%, and then 5 years go by and you call me and say, Sylvia, I think I have about 30% in equity now. I bought it for 600 and now it's worth $1 million. You can call your bank and most likely you can ask them, can you please reassess my property? Because I believe I already have enough equity to get rid of our mortgage insurance.
But they will do it.
For conventional.
Oh, for conventional.
Only.
Oh, yeah.
And they'll do it.
I know, it's years and years. I've struggled with that.
Most mortgage insurances will.
Fight for it.
Yeah.
Most mortgage insurances will. Because they want to keep your business. But FHA will. So those are some of the little things that when you're first starting, it doesn't matter. But when you're talking to somebody, depending if they're the 750 FICO score, and then we start talking about, let's compare your payment, and then they realize it's a lot cheaper to go conventional, or sometimes it's better to go FHA. Okay.
Yeah.
Now, there's been a lot of hype about ITIN programs. They are still available, including the 3.5% down, which is through FHA.
Through FHA?
Then I did. I just confirmed with my investor and we still have those 3.5% with an ITIN program. So the way that particular one works and the key factor to qualify those, so if you ever talk to anybody that has an ITIN and they're like, can I, whatever, the number one question you're gonna ask, the very first thing is you're gonna say, have you been paying your rent on time for the last 12 months directly from your bank account?
How many months? 12?
12.
12 months.
And what I have, what I've experienced a lot in that is, well, I give it to my mom and she pays it. Oh, I give it to my brother. I pay cash. That doesn't count. ITIN, you have to have, it has to come out of your account through Zelle, through check, however, automatic payment. Otherwise, you don't qualify for that 3.5% ITIN.
That's what, you paying what?
Your rent.
Oh.
Yeah.
The rent on time.
Yeah.
Yeah.
Which conventional FHA, they don't ask you for proof of rent, right? There was a time they did, just so you know. There was a time they did, FHA they did, not anymore.
Has anything changed? Any new rules that we should know about?
Right now in FHA, we haven't, which is exciting, which is good, not that I know of. But ITIN was definitely on my radar because of what's been going on. Go ahead.
Yeah, I just want to clarify that. So FHA has rules out a new guideline
Mhm.
as of May 25th.
Mhm.
Non-permanent borrowers will not be able to qualify for FHA. But the one that's, we still have a program that is not driven by FHA, and that's why we could still offer the 3.5.
And the reason, and the way it works is like this, and it's gonna sound, well, I don't like it, but it allows, and I've closed a few of them, is the ITIN with 3.5%, and the loan is an FHA. And the reason why it works is you have a buyer. Let me see my writing skills.
Wow, that's detailed.
So that's my buyer, oh wait, put some shoes on. And a cute little necklace. Okay, so there's my buyer. And then I have a seller over here, right? Here's a cranky seller. He's a little. Okay, so here's a seller, right? So in your traditional transaction, the buyer is gonna buy the house directly from the seller, and then there's gonna be a loan, right? So here's your lender. Okay, door, and then it has window. Okay, so here's your lender, okay? When we do an ITIN, there's an investor, which is an insurance company. This is some random person over here. This one has to be, we're gonna put some spiky here. And sunglasses. And shorts.
That's Leo. That's Leo.
Oh.
With a mustache.
And a
I just started growing.
There's a mustache. Okay, so this is your insurance company right here. So then the insurance company gets the loan through FHA under his name. And he then leases it to the buyer.
Oh. I didn't know that.
So you go into escrow and you sign everything. And as soon as you go into escrow, you're gonna sign a document that you allow this guy, Leo, to take over, the guy with the mustache. He takes over and he signs everything, all the disclosures, and the loan is under his name. That's the ITIN program with 3.5%.
Wow.
So it's being financed by FHA. That's how it's financed, because it's not under my friend here that has an ITIN number. It's actually under this one. And there are additional fees. So this guy is gonna charge, if the rate is 6.5, they're gonna charge you 8.5%. So he's paying, so Leo is paying the 6.5 interest rate, but he's charging Lala 8.5%, because Lala doesn't know. And he needs to maintain his mustache. So anyway.
I have another question. What, God forbid, what happens if something happens, he gets like,
Defaults.
he gets in trouble or he gets.
It doesn't matter because the house is under this guy's name.
Yeah, it was Leo's name.
It's Leo's
So
name.
he just takes over Leo's name off the
Really?
But there is a contract between them so that at any time, he can refinance under his name.
Well, it's like.
Leo,
Yeah.
Leo owns the house.
Yes.
Leo.
Technically,
It's under
fine.
his name.
What if he goes into pokey? What if he gets in jail and he goes into pokey?
This guy or Leo?
Leo.
No.
Leo, what are you doing?
He's always.
He's taking somebody else's mustache. This person, again, all this person is doing is paying money.
To them. Taking the money from them.
So who's prepared the document? Escrow?
Escrow.
Okay.
But he can sell, Leo can sell the house.
Yeah.
Yes, but it does say on the contract that it will keep everything intact as long as Lala continues to make payments to Leo.
And when does Lala get the house? When is she able to?
When
take over?
she can refinance under her name.
And she's permanent.
Well, no, we do have ITIN programs. So this is only for the 3.5%. The other
Oh,
ITIN
yeah,
programs
yeah.
are non-QM products. So they don't abide by the
So
FHA
when she's able to
conventional loans.
refinance, she can
Not-
get it under her name.
Yes, and the reason why they have this format is because this person does not have more than 3.5%. If Lala had 11%, she can go directly with her ITIN and get a loan. She comes in with 11.5% down payment and she gets it under her name and it's fine. But if she doesn't have 11%, she needs Leo.
So 10%, no, only 11%. It's
Not 10%, not 10.99, 11.
11.
Why? I don't know. So there's an 11, there's a 15, and there's a 3.5.
Oh, 11, 15, and 20.
11, 3.5, 11, or 15. Okay? So that's why they still have the one with FHA, because it's not under this gal's name.
Not correct.
So that's kind of how that works. Now, as soon as there's 11 or 12% in equity, then Lala can say, okay, I'm gonna refinance it now under my name, and then we get rid of this guy.
Get rid of Leo.
Sorry, Leo.
Trying to make money off you guys.
Sorry, how much time do we have? Okay.
No, but
we're almost
hey,
done.
I wanna finish by reminding you, there's a lot of business out there. Cause your phones, my phone rings off the hook all the time, but it's not always, you know, but the checks aren't coming in the way they used to.
So then Leo needs to get more jobs, needs to be more Leos over here.
Well, you know what I mean? But I'm serious. There's a lot of business out there. You gotta figure out what you do. Go put some sneakers on. Get something simple. You know, something like I buy these on Amazon. These bottle openers, this pen, this business card. Go around your neighborhood. Just walk. You know, put them on the doors. You don't have to knock and all that stuff. People are walking out, getting in the car. Hi, blah, blah, blah. No one's gonna say, "No, get that shit away from me." They won't. I've done it. Just go. You give it to them. Here, you know, like I'm here to help you. I've been doing this for 20 years. I've been doing this, blah, blah, blah. I'm in your neighborhood. Boom. Next house. Just keep going. Get exercise. Get out there. It'll come. You just gotta keep doing it. You know.
Yes.
Yeah.
So we've
$50
covered,
Target. That's
Yes.
Target. You know, they need your help.
I think this is definitely
know?
a very good option to
Yeah.
be able to talk to, because he's where I need, obviously.
It's
So-
been more quick. And then the title guy yesterday came in. I forgot his name. He's like, I got divorces. I got this. I got that. Like, what do you need? Death? And I'm like, no, I'm okay. Like, you know what I mean? Like, I don't want to be that guy either. But you know, like,
Just show up wearing black.
there's a lot of business out there. Whatever your will is, go for it. You know.
Yeah, that's a good one, Leo.
So you do that,
Yes.
DACA program?
You know what? Let me find out, because we were doing DACA through FHA, and I don't think they're
Yeah.
doing that anymore.
No,
But they have
they're-
conventional too.
For conventional, yes. Right now, conventional still can do it, but FHA is completely out
Oh,
as of
completely
May
out,
25th, yeah. But, you know, there's other programs. One thing I do want to say, we went to the Mortgage Expo, what was it, last week or 2 weeks ago? And let me tell you, there's a lot of great programs out there. They're getting very creative with affordable programs. It's just a matter of getting the buyer into the right program, like Sylvia was presenting. There's many different programs out there. Yes, there's the straight conventional FHA, but if you have that unique buyer, believe me, we have the programs. We have so many programs out there that we could basically create it, you know, it's unique to your buyer. So, you know, so they presented
I
a few,
agree.
but there's so
Yes,
many out there.
there's so many more.
So
So I
many out
guess to wrap this up, we want to make sure that we provide our clients with as much information as possible, schedule them with a lender, have them sit with them and go over all the different programs and make sure they're experienced. Because that's gonna make a difference when you're talking about supplemental taxes and then what does that mean? well, that's, if something goes wrong and your lender didn't quite make sure that things were done correctly, it's likely they're gonna blame you. Even though you had nothing to do with it, they might say, well, you refer me to your lender. And somehow it happens all the time. So be very cautious, be very patient with your clients, and educate them. And if you have any questions at all, my office is downstairs. Come by my office anytime. I'll be happy to guide you through the whole process. But there's still a lot of deals out there, a lot of grants, a lot of down payment assistance programs. And I'm pretty creative when it comes to making sure that a deal goes through. And so far, I haven't had, in 30 years, I haven't had a deal not go through that I approve. So
Do you do state income loan?
we do. Mhm.
Oh, okay.
That falls into the non-QM. Mhm.
Yeah.
Okay.
Yeah, they don't call it stated income anymore, they call it non-QM. We also have DSCR for investors.
Okay.
So we have a long list of
programs.
programs, yeah.
Okay, how many percentage down?
Usually for most likely about 20%.
20%.
Mhm.
Okay.
Because you gotta remember, these investors are not on the market to get homes back or get them
High risk, it's high risk.
foreclosed on because it's too expensive. So they wanna make sure that you have to have the right credit or whatever, and then they'll make it easy for you, but you gotta make sure you have your high FICO score, you have enough money in that property, so you're less likely to walk away from it.
Okay.
And I do agree, I don't think the market is gonna crash because the majority of homeowners have a very low interest rate.
You know, and if it does, even if it
And there's
does,
equity.
there's a lot of money out there.
Yeah.
I mean, there's people out there, you know, real estate's always moving, whether it's slow or fast or crashing or interest are high, it's always moving. You just gotta keep doing what you do and you wanna be the people your friends and family calls. You know, something happens, hey, you know, this U-Haul just pulled up. What's going on with that house? You know, like, I'm dead
That is
serious.
true.
You know, I
That
get
is
that
true.
call the other day. Like, I'm like, I don't know, let me look it up. Nothing's going on with it. I don't know, they're probably some rental or whatever. You know what I mean? But
Yes.
you want to be that guy, that person that, that's pretty much it.
I just want to ask you a question, Sylvia, when we worked at Beneficial, what were the rates we were selling back then?
Oh my gosh, I wanna say 13%?
Yeah.
On mortgages?
Yeah, and there was a lot.
We were
of
killing it too, we
business,
were the
yeah.
top office too,
Yeah.
because we were killing. Well, my first house, I think I got it at 9.5, 10% when I bought my first house. And that was through VA. Mhm.
18 and 22% in 1980.
Yeah, and so that's why when people ask when is the right time to buy, my answer is always when you're financially ready. Let's talk about your current financial situation and see if you're ready. Because they'll say, what if I wait for, because I had to get this question a lot, what if I wait for the rates to drop? I said, then there's gonna be you and 100 more people trying to get the same house. Is that not true? What happened when the rates went through? Is like, people were offering 50,000 to 100,000 to be able to get the house. Oh my goodness, that's ridiculous. So it's all, so I said, if you're ready, do that. There's the 2-1 buy down, 3-1 buy down. There's all kinds of programs out there.
And I have one more thing. I have a friend that we missed a house right here in Chino Hills and Carriage Hills, and it's like this, okay, the area's like this, it's about 250 houses, and we didn't get the place, and I was just sitting there, and I'm like, I gotta get up and do something, right? Instead of just coming to the office and staring at my computer. So I put like 300 of these together, and I got my little bag, and I parked at the bottom of the hill, and I walked that whole area, okay? Took me 2 days. I was sweating bullets. People were coming out and giving me water. It was awesome. And then I'm dead
Sorry for
serious.
him, like, he's a homeless.
So everyone was super cool. I met like 5 or 6, people, and then that was last month. Now next month I'm gonna send a postcard. Boom. And then next month I'm gonna send a postcard. Boom. And then by 3 months I'll walk it again. Because I want to get that area. I want that area to be mine.
Area.
Yeah, I want that area to be mine. So I'm gonna walk, and no one's gonna walk that area. I'm telling you, it's hard. so that's why I'm like, I'm gonna do it.
Tomorrow.
So you go right now, just like that.
No.
Right now.
Well, I didn't make a mistake. We're canceling one day, but I was like, okay. Anyway, so yeah, so that's my goal, and that's what I'm gonna do. That area, and that's what I'm gonna do. I'm gonna hit that area hard every month and see what happens.
That's awesome.
And then I'll let you guys know what happens.
Yes, if you need flyers of any sort for your open houses, for your door knocking, let me know. Let me know what you need. I'll be happy to create some for you. Thank you very much, guys, for being here. This
Yeah,
was
thank you.
amazing. Love being in front of you guys.
Thanks for coming. There's sandwiches over
Now,
there.
there's sandwiches and sodas, and I was gonna bring beers, but.
Bring beers. Let me sell some.
I wanted to do seltzers and beers, and he's like, no, Sylvia, no alcohol. I'm like, oh.
Oh,
That would be getting everybody.
Oh, my
Wow,
goodness.
so that would have been like, let's have mimosas either. Everybody would be asking questions.
That's a way to draw a crowd.
Yeah, for sure. But help yourselves, guys. Thank
Yeah,
you very
it's
much.
a lot of food.
Yes. Oh, let's take a quick picture, guys.
Can we go to the hallway? Can everybody go to the hallway? Take a quick picture?
One of those?
Oh, yeah, that would be wonderful. Yes, I want to get it. Where was that?
I just started. I did it once.
Then it can adjust.
Yeah. Yeah, no, that's not true, you know? Yeah, I know. I've been on stage. Hey, get in front of me. Better. Porque me tapa la panza. Alright, here we go. Ready? 1, 2, and 3. One more time. 1, 2, and 3. Okay, my phone.
One of you guys send it to me, please.
Here we go. Ready? 1, 2, and 3. 1, 2, and 3. Very cool.
Thank you so much.
Thank you, everyone. Thank you. Please help yourselves. You're welcome. Hopefully it was useful. Thank you, honey. Thank you, my love. Thank you so much. Thank you, love. Thank you.
Thank you, Sylvia.
You made it, my love. Okay.
Yeah.
Very good job. Water, this water we have Diane. I'm Sylvia. I'm his senior. What's your name? Welcome to welcome, welcome, thank you so much. I'll bring some pens and I'll leave it here for you. I don't think so. I think we have. I think we're fine. You're welcome.
I was gonna tell you to print it up. So then, Chris, you know the one thing you referred me?